Let's get started. I think people are coming in.
All right. So this is the RealTrade New Path Masterclass. I'm Jim Brown.
I'm Ryan Poole. Nice to meet you all.
And we do this the first and third Tuesday at 10 o'clock of every month. Or are we going to do this every other week, Ryan? I think we're going to go to every other Tuesday, not first and third Tuesday. So we're going to go to every other Tuesdays to keep it regular. We're going to keep this thing super short. Ryan, do you want to intro the topic?
Yeah, no, it's just the more I've studied this topic, the more, that I look at it from an agent perspective of how it's going to affect us and how it's going to affect the South Florida, real estate market. And it's going to be a cascade of events. It's, so everybody remembers hearing about, down in Miami with Surfside, that condo that collapsed. Well, obviously hundreds of people died. That was a big tragedy, that affected a lot of people's lives. And the state has now passed a new regulation called Senate Bill 4D that puts in place certain metrics and inspections for condos that are 25 years or older, that they have to pass. And there's a lot of regulations that are coming through that's greatly going to affect the South Florida condo market. So glad you guys are here. Glad you're going to inform yourselves, and we're going to have a lot of information that's going to be shared here that can bring you up to date and help you with business. And we can look at this from an agent perspective too.
So I'm going to put this up, Ryan. This is a timetable. This is a metric that came off of a consulting engineer site, Tomasetti and Thornton and Tomasetti. They're a big consulting engineer in Miami. And so with regard to the discussion today, I'd like to keep it to 45 minutes or less. If you guys can turn on your cameras, it helps us greatly, just because it really is valuable to get the feedback of the audience. We're going to have a question and answer period at the end. Ryan's going to give you some time-saving tools. I'll give you some time-saving tools. You can text me any questions you have. You can obviously go in the chat and give us any questions you have today that we can go over in the question and answer period, or raise your hand or whatever. But go to New Path Title anytime you want, and you can text me a question. You can see Contact Jim, and we can get that question knocked out in the next time we do one of these. And any future topics you'd like to cover, you can always text me. And I'm going to give you guys one reminder: read your contract 3 times today and read it once a month, every month. I guarantee you it'll make you a sharper agent. All right. Now, oh yeah, and the homestead deadline is March 31st, coming up real quick. Don't forget, you guys, it's a good opportunity to get in front of your clients, remind them about the homestead deadline. It keeps you top of mind and gives you another important bullet point to talk to with your buyers that close in 2022. All right, without further ado, Ryan, so Senate Bill 4D, here is the timetable of inspections. There's a couple topics I wanted to go over today, which is, what do the inspections mean, the effect on lending, and the effect on insurance. So if you want to lead, I'd be more than happy to have you lead, or take over.
Yeah, no, I want to share too as an agent perspective. So part of this regulation is what the state has put of who's affected, of what condos have to be affected. And Jim's sharing this great chart. So basically there's 2 different areas. It's either 3 miles from the ocean, or closer, or 3 miles and out. And it's either 3 stories or higher, 25 years or older, or 30 years or older if it's 3 miles. So just looking at it from a bond perspective, that affects a lot of condos here in South Florida. So if you're within 3 miles of the ocean, or 25 years or older, you have to, by December 31st, 2024, do an engineer report for the building to see if there's any structural integrity issues for the building. And a big piece of this, Jim, is, as you know, that report now has to be shared with the unit owners and potential buyers. So this isn't something that people can hide from this engineering report. So you can imagine all these people now are going to know if there's any kind of issues with the buildings that the potential people are buying, or if they're selling.
And historically, these reports were done every 40 years. And I'm not going to say they were fluffy reports, right? We're talking about human lives. But the reality is, you have a lot of older buildings that are controlled by people that are snowbirds, and they do everything they can do to defer maintenance and control costs. And this new heightened report, you might think it's legislators trying to justify their existence or engineers trying to justify their existence. They're trying to save lives. So in Surfside, 100 people died. The goal with this new legislation is we don't want to have that happen again. So as much as we think this might be an imposition or something, somebody's got their mic on.
Yeah, I was going to say, if you can, mute your mics if you can. Thank you. I can't mute it for mine, Jim. So
No, I'm not able to either. So as much as we'd like to, a lot of times we'll say, oh, this is just somebody justifying their existence. This is going to be consulting engineers coming on site, and just the studies alone are going to be comprehensive. So that it's estimated the budget for some of these, just the surveys, are going to be $30,000 to $60,000. They're going to do borings of the building. They're going to look at rebar. They're going to look at everything that goes into compiling the structure, including, like you were talking about, Ryan, you were talking about plumbing, roofing, HVAC, and the concrete, and the rebar, and all the things that make up the structural elements, the pool supports, the parking garages, all of that. And if you remember in Surfside, so you had a whole complex of buildings that were surrounding a pool area. The pool gave way, and one by one, all the structures fell around it. Had any one of those structures not collapsed, the adjacent structure to it would not collapse. So they're really talking about something that's on a scale that hasn't been seen before. And the frequency of reporting is something that's not been seen before. And when we talk to the consulting engineers, these guys are gearing up to do something that is not like the 40-year studies that were done prior. And they don't think that the associations are prepared for the level of investigation that's going to happen in these transactions. There's a couple really unique things about this bill also. There's no other piece of legislation that I'm aware of that imputes personal liability to board members. So there's three parts to the rule. You have to do the inspection, you have to generate reports, and then you have to set aside reserves. If any one of those three elements isn't hit, the board members can be held personally liable for their actions. So there's a thing in the legal world, a legal fiction called the corporate veil and insulation from corporate liability. So if a General Motors executive makes a bad decision, right, and they lose money at General Motors, that guy is never, or that woman's never going to be personally liable. In this particular bill,
not that I know of. I talked to Dan over the weekend. I said if they needed me to do anything, I would be happy to help.
I think that might be Sandy or
No, not me.
maybe she's.
Hold on 1 second. Hold on. Let me just make sure.
There we
Mute.
go.
There we go. There we go,
All
guys.
right.
Awesome.
So unlike the protections afforded to board members in General Motors, here we have unsophisticated, not professional board members that are going to be challenged with the task of getting these highly technical inspections done. And then there's an element of the bill that requires that reserves be set aside. Ryan, you had said something about 125%. I wasn't able to find that anywhere. Did
Yeah.
you?
So well, part of this bill, let's back up for a second. Not only did they have to do, the mandated engineer report, right? There's a part of this bill too where they have the reserve study on top of it, and a lot of these condos are going to be doing both at the same time. So if there's, let's say the roof needs to be replaced within 10 years, let's say the plumbing needs to be replaced within 5 years, or the electric, they have to start putting those monies in reserves from that point as well, on top of whatever structural issues that come up in the engineering report as well, Jim.
And then it all has to be in place on that timetable.
Correct.
So as I read the bill, they have to get the report done, and the report can have two phases to it. It can be a first phase if they don't find structural issues, and then a second phase if they find structural issues, and the reporting can take months. And then on top of that, they have to figure out how they're going to set up the reserves. In one example, we have a client around the corner on the 40-year reporting schedule. There's 160 units, and the monthly budget let's see, somebody else's. I wish we could blanket mute everybody. Anyways, in this one example, the special assessment is going to be $78,000 per unit. And so this wasn't under the new Senate bill, but they asked the engineers to do the heightened, it was an older building and they asked them to do the heightened requirements, but the SB4D hadn't been released yet. So in this particular example, it's $650 a month for 15 years on top of the $900 regular fees. And that computes to about $43,000 in interest over that 15-year period. So if you have $900, now you're going to be paying an additional $650 if you choose to finance it. And if you're not going to finance it, it's a lump sum payment of $78,000 per unit. These are people that bought pre-COVID, $350,000. During COVID, the price ran up to $900,000. And the reality is now they're probably going to sell for 820 grand because of this special assessment. And so there's a couple of different elections in the homeowners association and the condo association disclosure forms. And it's important that everybody understands what the differences are. So here is the condominium association disclosure. So this has always existed, but for this addendum, it requires that agents know what has been recorded in the minutes a year prior to the sale and report that in writing to the buyers. So if the board members, let's say Ryan and I are on the board, and Ryan says to me, "Hey Jim, did you hear about Senate Bill 4D? We're going to have to rack up some special assessments." And I say, "Oh, I'm not aware. Let me know, tell me what that looks like." An agent involved in that transaction has to scour the meeting minutes and then come up with that meeting minute phrase and then relay that to the buyer in a transaction. The burden that this thing is going to place on people. I mean, that rule has always existed, but that's going to create so much confusion and so much dialogue. And then, as Ryan said earlier, the sellers actually have to provide a copy of these reports. I mean, some of these reports are going to be 60 to 120 pages. Yeah. If you're a buyer in that condo and you get that report, I would imagine it's going to be a little bit overwhelming.
You could have a consulting business of just helping, potential buyers digest these reports. I mean, and they have to put these reports in a conspicuous place in the condo. So it's going to be there. Everybody's going to see it.
They have to give a copy to the seller.
Yeah, they have to give a copy to the seller. So everybody's going to see it. So it's going to be very interesting, of how quickly us agents educate our buyers, right? And, obviously if we're working with sellers, educating them of what's coming through, because once these reports are done, they have to be shared. So I would say this, if you're looking at this as an agent perspective, which I've been an agent, for over 20 years, is, if you have some sellers that are on the fence and they're in these older condos, I mean, bring up this information to them. Ask them if they're aware of Senate Bill 4D, and how could it affect the market for their condo. Because I think what's going to happen is they're, once these reports start coming out, and all of a sudden these condos start to have a negative influence, is going to affect the overall market, whether the condo has structural issues or not. People are going to be looking at these older condos and going, "Wait a second, maybe they're going to have another report, which they have to have them in another one in 10 years, Jim." They'll have to have another structural
every 10 years.
Yeah, every 10 years. So
yeah.
It's
not like it was where they're doing it every 40. So there's a 25-year limit and a 30-year limit that's going to come up in December 2024, and then it's every 10 years after that. And I think if you have sellers that have contemplated selling and they're in units 3 stories or above, and whether they're in the 3-mile zone or not, I think this is a good opportunity to get in front of those sellers and say, are you aware that these things are coming? This may be a good time for you to get out of that waterfront condo and get into, another type of unit or something different. But the reality is the complexity with which you'll be selling a year and a half from now is much higher than the complexity that it's going to take to sell a condo today. And
exactly.
So Yeah, you're just going to have a whole
The
nother.
urgency, yeah, the urgency's there. I mean, the urgency's there. If they're going to sell, it would be a great time rather than waiting a year and saying, oh, maybe the market's going to go up in a year from now. Well, let's look at what could be happening a year and a half from now once these reports are in.
Ryan, I also wanted to go over, there's going to be a real other issue, and that is the condo questionnaires. There's a couple elements, whenever you're buying or selling a condo, obviously, you have the insurance issue, and then you have the financing issue. 70% of all transactions are financed transactions. The condo questionnaire is something that lenders submit to the associations, and the associations complete the condo questionnaire. We've all had transactions probably where there were too many investors in a building and a condo wouldn't be approved for financing.
Yeah.
The condo questionnaire is going to be a real roadblock to financing because it doesn't give the opportunity to explain the dynamics of the remedial work. So if there's work going on in the building, the way it was explained to Ryan and I last week from somebody who does these loans regularly in condos, it's kind of like a light switch. It's not like
it's either yes or no. It's either yes or no on it. If you check it off, Jim, there's structural, if there's issues, and then they ask for the report actually in that questionnaire as well.
And if it's, from what Mike was telling us, Ryan, if it's one unit in the entire project, they won't be lending. I can't even wrap my head around that. So let's just say there's one unit that has a bad balcony or something. They won't lend in the whole unit. It boggles my mind, but that's the gravity of this thing. And when we were talking to the insurance agent about underwriting in condos, he was basically of the same opinion. If the problem is, it used to be there was a 25% rule, and if you're replacing more than 25% of the roof, you had to do the whole roof. Now, from what I understand, if you're doing any portion of the roof, the whole roof is going to have to be done in order to get insurance. And in some of these buildings, that's huge.
Yeah, and obviously that doesn't mention if something comes back from that engineer report that if there is any kind of structural issues. So now we're looking, let's just, as an agent perspective, look at this. You're looking at, with this reporting, potential buyers could have a really tough job trying to get lending on condos. There might be even a real tough job of getting insurance. We all know Citizens Insurance here has been at the max. They've been fighting, trying to draw people from an insurance. This could be a perfect storm for Citizens here and other insurance providers, Jim, to not insure these condos that are on the beach, which are obviously high risk areas. And then, wow, then we're at a real mess.
And what does the thing look like if we have units that are having to be emptied, or the association dues are too high? And I'm not a conspiracy theorist, but I think we're realistically looking at a buying opportunity for big box buyers to come in, and assemblages and things like that. And listen, again, I'm not a conspiracy theorist, and I try to avoid drama.
Well, there are people smarter than me saying that could be the biggest land grab in Florida's history in the last 20 years. That for developers, right? Because there's a lot of these condos, as you've mentioned, Jim, that the owners are on fixed income. They bought pre-COVID. They don't have a lot of money for increased dues, and it could come to a point, right, as the association votes, and they could be selling their whole, the whole project to a developer.
Well, I've got a unit over at the corner of Southern and Flagler. It's 3 stories, and we've had special assessments, and there's tons of deferred maintenance in that building, and those people are owners, and so they're dug in, they're not going anywhere, they're paying their special assessments. But then if you look at the stretch of condos from Southern down to Delray, you've got that whole stretch, and we've had many clients in there. They're from Canada, they're snowbirds. And the buildings are basically, many of them are boarded up over the summer. They're ghost towns, but when season comes around, they're flourishing. But the reality is if the inspections reveal significant structural work, those guys aren't going to pay special assessments. They're not living there. Those are second homes. Those are luxury. A lot of them are people from Canada. They're extremely frugal. They come down here. They've got much.
It's a huge point of urgency. And remember, let's say nothing comes up with the structural integrity, when they test the building and the engineers look at it, they still have the reserve piece of this, Jim. But let's not forget that. I mean, they still have to say, hey, the useful life of the roof's this, the plumbing this, the electric that. You need to start putting those in reserves. So, I mean, the best case scenario is they're going to have their HOA bills obviously go up because of the new reserve requirements. Worst case scenario, they could have a huge special assessment, that they would have to deal with at that point.
Yeah, and the point I was trying to make is, like, some of these places, people are dug in and they'll pay. But other buildings where they're primarily snowbirds, if they're hit with a special assessment, their go-to button is going to be sell.
Yeah,
it's going to be a tough dynamic. I think there's a real opportunity for agents right now to educate sellers and get sellers that were previously considering selling within the next 2 years on the sales fence now.
Yeah, I would even say within the next 5 years, because even 2 years from now, once all these reports come out and, it's out in the open now, everybody's talking about these older condos, there's still going to be a shakedown for 3 or 4, years after that. So even if they've been thinking about selling within the next 5 years, if they want to, sell this before, then, I mean, now is the time to sell 100%.
And this also applies to co-ops.
Yes.
And co-ops are a historic form of holding properties. It's kind of a New York hand-me-down. And a lot of these co-ops are run very economically in that same stretch of from Southern on the waterfront down to Delray. On that same stretch of road, there are some older co-ops there. I don't know of any younger co-ops. I don't think a co-op's been done for the last 20 or 30 years. But if you know people that are in co-ops, those are in the same situation, the same reporting, the same reserves, and the same inspection requirements.
Yeah, and traditionally co-ops have been tough to finance too. There haven't been a lot of finance options. It could come to the point where even condos now are in that same boat. Just a lot of lenders won't lend on them. I mean, as we can see with this condo questionnaire that we've discussed, and the insurance piece, Jim, really is scary. If these condos now can't start getting insurance, major challenges is just, wow.
That's dramatic.
It's very dramatic.
I want to make sure everybody understood. If anybody wants to raise their hand, don't feel, singled out, but the significance of scouring the association minutes for the year prior to the sale, right? So as a buyer's agent, I'm seeing more and more sellers agents don't really know the rules. So as a buyer's agent, you'd like to think the seller's agent is doing all this stuff, but you have to know the rules. You have to do your job and the seller's agent's job. And these things could kill a deal last minute. So if you have a buyer that's in a transaction and they get cold feet at the end of the transaction, and maybe it's completely separate and apart from any issue involving the transaction. The husband and wife wake up one day and they're in a bad mood, or they're fighting and they don't want to close. The first thing they're going to do is they're going to go to an attorney, and the attorney's going to ask the association for the minutes. And if one of these issues was ever discussed in the minutes for the year prior to the sale, it's going to be a material default. And the day before the sale, the buyer's attorney can send over a notice that said you failed to mention a special assessment that was discussed in the meeting minutes a year prior to the sale. And under section CI of the condominium association rider, they'll be able to cancel the sale last minute. That's dramatic. So as buyer's agents, it's incumbent on us to do our job and also the seller's agent's job, and figure out, what the issues are in some of these associations. And that's going to include scouring the meeting minutes prior to the sale.
Yeah.
Because as agents, we want to make sure we close. We want to make sure our buyers educated and our sellers, disclosing everything they need to disclose, but we also want to make sure we close at the end of the day. So it's incumbent on us to close all those little loopholes that buyers agents can find to get out of at the last minute. Nobody wants to go to prepare for a closing that doesn't happen.
So let's put a summary on this, and I think, Jim, we can start getting questions because we do have some people that have some questions in the chat as well. But to put a summary in this, this isn't going away. This is mandated by the state by end of December of next year, not this year, but next. All condos 25 years or older, 3 stories or higher, are going to have this mandated engineer report done. Okay. Obviously, their past 3 miles is 30 years, but any condos 3 stories or higher are mandated to this. The second piece is they also have to have a reserve study done, and they have to start putting those monies aside as well for the reserves as well. There could be issues here, with insurance and lending on both, depending on how these reports come back. And as an agent, value add here. I would say any seller in an older condo, 3 stories or higher, that is thinking about selling in the next 5 years, you want to have a discussion with them. So with that said, if you have any questions, put them in the chat now. We got a couple questions here. Jeff Stewart says, I see there being a lot of issues, and we touched on this a little bit, with getting condo owners to serve on boards with potential liability issues. Jim, you want to speak to that on as far as the liability issues of what a condo board has to do with these reports, and what would happen, what would that look like if they didn't? And what happened? I guess another question too, Jim, would be, what happened if all of a sudden everybody in the board resigns and there is no board? I could see that happening. You know what I mean? I'd be like, no, it's like toxic.
You bring up 3 really important issues that we can do a whole title talk on any one of. So what does it look like? So supposedly, I did some reading, and there is going to be some integration of local municipal planning bureaus, planning offices, municipal planning offices being involved in this thing, and they don't know quite what it looks like. The legislation was somewhat rushed, and there's a lot of critics out there of it. But without sounding critical, the execution piece isn't done yet. But supposedly, if there's remedial work that has to be done, it's going to be handed over to be monitored by local municipal planning authorities, and then they'll do theoretically code violations if they're not on schedule to do the remedial work. You also mentioned personal liability. So if I'm on a board, I could be responsible personally to the planning authority, to the municipal planning authority. But the third point you made is, I could also be, so I have exposure to the planning authority in theory, and then I have exposure to the unit owners in theory.
Correct.
So maybe they can, these are all novel areas of law. We haven't ferreted out yet, but maybe I could be sued personally by the unit owners because I didn't take action. I don't know. We have to see what that looks like. There's going to be additional details.
See, what I've heard and I've read a lot on it and trying to educate myself as much as I can, and I think every agent should on this issue, is, from my understanding, is that that if they have to pull permits, for the work, for the engineer report, obviously it's then at the local building department where the permits are there. I guess the biggest thing is who actually, if you don't need to pull permits and there's maybe something else that you're not facing these deadlines, is that then done by the local municipalities, which Eric said, well, the local municipalities, he just asked, take over board responsibilities. I doubt that. They don't do too many good things. I could imagine doing that.
Here's the thing, right? We talked about General Motors earlier, right? General Motors has a professional board. We'd all love to think the board members serve because they're magnanimous guys and women that want to see these companies flourish, but they're professional board members. They're paid a lot of money and they make decisions on behalf of the company and as a board member. Associations, in contrast, are volunteers. They're not sophisticated. Who could imagine taking on a volunteer position on a board when you could be liable to municipalities and unit owners? I can't even wrap my head around it.
Yeah.
But I don't think we're going to see municipalities taking over board member positions. Who knows? Maybe we'll have professional association boards. I doubt it. But I also could see exactly what Ryan discussed, and I've seen this. There's a couple of buildings downtown. One of them that comes to mind recently is the Whitney. When they were in receivership, and there was a number of, in the beginning, in the mortgage foreclosure crisis, there was a number of board members who were just frustrated, and they were down to 2 board members, one board member at times, trying to recruit people to be on the boards. And they were frustrated with the number of people who weren't paying, and then the heated nature of the board meetings and things like that. And for a while, there was only one guy who was a consistent board member.
Yeah.
I think he's still there now. He owns half a dozen units or a dozen units in there, but
Yeah. Yeah, no, it's interesting. I mean, it's.
I wish I had the answer.
I know there is no clear answer. It's it's as I'm looking at this, there's going to be. I think what's going to happen in the next 5 years is there. Older condos, 3 stories or higher, could become toxic. I mean, long story short, people just don't want to deal with it. They could become toxic, and until this whole thing shakes through the legislation, they do these engineer reports, they do these reserve studies, they do the repairs. And then once they're done, I guess people would be more comfortable, number one, being on the board and purchasing. But man, you want to stay ahead of this if you're an agent.
Mark had a question about reserves.
Yeah,
Mark,
can you guys hear
go
me?
ahead, Mark. Yeah, go ahead,
Yep.
Mark.
So my question is, and I'm really familiar with the reserve studies, and my question is this Senate bill, how's the timeline set up? Say they do the inspection and they find that there's work to either the roof or other items need to be addressed. Are they going to force them to fully fund that? Or is it just based on how many years they feel is left? Like, because that's typically how they do it. If there's 10 years left on the roof, they want to see in 10 years it's fully funded. Has that changed to accelerate that process?
Yes. So
Yeah.
the way I see it, from what I've read, December 2024 is the drop dead date where the reserves have to be in place, and then you have to work backwards from that date, depending on how bad the building is. So December 2024, everything has to be in place. The reserves have to be established, financed, or otherwise. And then you have to figure forward, or you have to figure back from that with regard to the inspections and starting, you have the remedial plan has to be in place by that point, and the reserves have to be in place by that point. But just the inspections are going to take months. And if they have to do phase 2, the phase 2 is going to take definitely a couple of months. And the phase 2, then you have to go back and you have to collect bids and figure out the pricing for everything. And we all know how long it takes to contract a job. Could you imagine contracting a job of potentially, a nature as grand as these?
So
Yeah.
once that amount's established, though, my question, like if they say, well, it's going to be $5 million to shore up the concrete when you need a new roof, how quickly are they going to make that put in the reserves? Or is that just, I mean, I guess once again, is that being accelerated, or are they
Yes.
just putting a plan in place?
No, they want the reserves in place by December 2024.
Wow.
I know. So, from my understanding too, it's, the structural integrity issues from that report, right? I mean, obviously everybody, has other things that maybe, plumbing or electric that come up as well that has usable life. And that's more of the reserve study for those replacements, that are non-structural issues. But if structural issues come up, they're going to want the buildings to put those up right away.
So there's 2 parts to it, Ryan. There's
Well, yeah. So you have the the structural integrity engineer report, and then you have the reserve. You have the second, which you have 2 phases, phase 1 and phase 2, and then you have the reserve study. So they're going to have to do a reserve study as well for all those other things, like the plumbing, like the electric, and they have to put on a schedule. Yeah, they have to put on a schedule for for replacement to the reserves, which now is mandated, by the way. They just can't kick that can down the road either anymore. And maybe there might be other issues too, like the pool needs to be resurfaced, or all those kind of things.
So Mark, I guess the best way to explain it is, it sounds like from what I've read, if you have a structural issue, the reserve has to be in place by December 2024. If you have a non-structural issue, it sounds like from what Ryan's saying, and then all this stuff is evolving and it's going to be clarified in the legislation soon. But from what Ryan is saying, that if it's non-structural, it sounds like it can be done historically as it's been done over time.
Yeah.
But I do know the structural stuff right now, as the bill sits, has to be in place. The reserve.
Yeah, that has to be placed right as soon as possible, right away. Yeah.
2024.
Do they have to collect all the money or just have a plan in place?
They have to either have financing lined up or have collected the money.
Correct. Yeah.
Huh.
So there's a huge opportunity, obviously, with putting those lending deals together for these buildings as well. You know, for because they're going to need these repairs and they're going to have to be done, and they're going to have to be done quickly. With
Hey, Jim,
timelines.
who's loaning money for these reserves buildup? I mean, is it private equity? Is it typical banks? Who's doing that?
I can do some research and I can let you know.
I can't even see the property in the office.
There are hard money guys who have popped up right away, hard money guys and women, let's be fair, that have popped up right away to help unit owners at the unit owner level. And there's always been banks. I know Seacoast was a big one that will finance condominium improvements. The problem is typically the construction stuff, they want to see the improvements on the ground before the funds are dispersed. It's going to be a chicken and an egg thing. But
It's broken.
Yeah.
if your question is who is specifically going to be doing these, are going to be doing these loans, we can scrounge up a list of people who are going to be doing these loans. But I know Seacoast Bank was at the top of the list for a while.
But it's really not even, I mean, it's a loan, but it's not if it's for reserves, it's not really, it's going to be sitting there as a deposit. Am I correct?
Well, it's going to be drawn on, like if the project has structural deficiencies, the money has to be there in place, either in a loan or in cash reserves, but it's got to be deployed, post haste.
And they have timelines in the bill, Jim, of when they have to do these, do these repairs, right? I mean, they got to do them as soon as possible. They want to make sure we don't have another, that happened in Surfside. That's the big whole point of this whole bill. It's a life safety issue. So, yeah, and then I mean, like I said, there's so many moving parts to this, and like I said, the big one I see here is insurance. How does insurance companies look at this? I mean, they now have pretty much a free reason to not insure high risk real estate assets.
Yeah.
Well,
after the couple of hurricanes that blew through a few months ago, I have a big client down in Miami, and they're an insurance agent, and he said that the offsets, are going to be huge. So who was it, Ryan, that we were talking to? So what they said, it was the insurance agent, the underwriter.
mm-hmm.
Everybody wants to throw the insurance company under the bus. And I guess what his position is that the insurance companies lobbied the legislature to make this thing more like a law rather than, if you look at any coastal community, Cape Hatteras is a good example. The communities, the coastal communities, the values depreciate, and everybody blames the insurance company. And I think from what the insurance underwriter was telling us, this is kind of like redirecting the finger at the law rather than the insurance companies, because the insurance companies just can't possibly keep up. So now the law is going to be leading and the insurance companies will be following rather than vice versa, like the insurance companies taking all the heat out front.
Yeah, Mark had another question here. Is there any verbiage in the bill with regard to how the state will enforce this bill?
Not yet, not that I'm aware of.
The only thing that I've read is the local building departments. If there is issues, right, and they're going to have to pull permits, that's going to be, the ones that are going to be, enforcing as far as the repairs from my understanding. Will they probably amend the legislation to fines and, like I said, this whole personal liability issue with the board members. That's so scary to me. I couldn't imagine.
So the way a permit works right now is the permit stays out there until the contractor acts on it, but it's not like there's an enforcement provision from a municipal perspective to compel the contractor to perform more quickly. With this legislation, I haven't seen the black and white rule, but the discussion is that the municipalities will have enforcement provisions to make sure that there's milestones hit. So maybe the reports are going to have timeframes, and then the municipalities will enforce the timeframes in the report. I hate to speculate, but right now that's all we can do because they're still buffing out the rules. But there will be enforcement provisions at the municipal level, at the county and municipal level. Anybody have any other questions?
That's good.
No?
We've covered a lot of stuff. If you have any questions, you can feel free to put them in the chat. Yeah, it's going to be a very interesting time to be a realtor here, in South Florida here in the near future. Once these reports are out and people are going to be digesting them, and you're going to have to be sharing them with your buyers, it's going to be very interesting to see how that affects the market. Obviously, if there is issues, I mean, with any building, if there's structural issues, it's greatly going to affect the values. And where are those people? Well, I just want to look at this too as an agent perspective, Jim, is like, where would be the more valuable assets, right? Because obviously the higher rise condos now are going to be, have issues and going to be, the garden, type condos, right? 2 stories or less. The newer construction, single family homes. I mean, those will become more valuable, I think, here in the medium term, in the next 2 to 5 years, as people's just like, hey, I don't even want to deal with these condos, these older condos, until this whole thing gets worked through. Let's buy this. We can sell that and buy another one. I mean, there's going to be a lot that goes into it, Jim.
And we've done several assemblages in the office lately, and assemblages where they round up several condos and they convert they remove the declaration of condominium for the purpose of demoing the property. And you're going to see more and more of that. And there's an opportunity to talk to consulting engineers that are out giving the reports and finding out firsthand potentially which buildings are going to have significant problems, and rounding up corporate buyers, big, enterprise level buyers and things like that, for sure.
100%.
I wanted to wrap up, Ryan. I wanted to give some real props to RealTrade and let you introduce the RealTrade advantage for agents. And I wholeheartedly believe in the product. And Ryan's not going to mention this, but it's the best way to double dip if you're a seller's agent. I just think the thing is genius. Take it away, Ryan.
Yeah, no, it's awesome. Thanks, Jim. I enjoyed doing this great value add. And nice thing about RealTrade is we're an online marketplace where buyers and sellers can search for homes. And then we also have a big social media component. The big thing here is we're totally transparent in RealTrade. So buyers and sellers, if you're a listing agent, they can contact you directly off your own listings, actually message you right through the app. And the nice thing is it's free to make a profile on RealTrade if you're an agent. So it doesn't cost you anything to be there. The big ones that pay for the platform are the vendors, because we have the whole social media aspect where vendors like Jim and lenders like Jeff are on there that you can connect with and get some great information, and they can help you do business on RealTrade as well. So it's not only a marketplace where you get more clients, it's actually a place where you can accelerate your business and make some great business connections. And check it out. I just put the link in the chat, realtrade.io. You can check that out. But and let me just give a little thing here on Jim. As I've used a lot of different title companies in the past, and I've really have been enjoying working with Jim and New Path Title because of his awesome software that they have, which is a total game changer as well. That they use, Title Leap. It literally is like a contract coordinator for agents. And it's amazing. They keep track of all your drop end dates. You can communicate right through the platform. Everything is right there in the open. If you need anything in the file, it's right there instantaneously. And I love using it for every closing.
Thanks, Ryan. And then you guys, anybody needs any kind of transactional support, you can go to New Path Title 24/7, send me a text. The reality is anything you're coming to me with transactional friction, I learn from. And then we educate the rest of the agents in the community. And I say iron sharpens iron. You guys tell me the problems you're having. I'll come up with a solution and I'll bring it to everybody. And everybody's had the same friction, I guarantee it. We're also doing another product called Title Advance. So if you're going into a listing appointment, I want to make sure you nail that listing appointment. Text me the address of the property you're going to. I'll get you a title advance. You can use that title advance to distinguish yourself in the other listing agent pool that the sellers are interviewing, and nail that listing. And as importantly, and more importantly, sometimes, is identify title problems early on. I closed a transaction the other day. 10 years ago, the seller was served a code violation because the color of the house and the color of the address numbers weren't contrasting. And so they had an ongoing violation, code violation they were unaware of, for $57,000. And so a couple of days before closing, the seller thought they were walking out the door with 70 or 80 grand. And now they find out they're walking out the door with 20 grand, and they're furious. we closed over it and we escrowed the money. But the reality is if we had had a title advance, we could have solved all that stuff, you know, way ahead of the ball, closed on time, no friction. So use the title advances. I guarantee within a couple years, title advance is just going to be that the tools like title advance are going to be the way real estate transactions are done. So just text me the address and we'll get you one real quick. New Path Title, Ryan explained that, James Brown Law, anything real estate related, property, evictions, ejectments. Nobody knows the difference between ejectment and eviction, huge difference. And unlawful detainer, we do that stuff every day. Hard money loans, and we'll close in crypto. So if you have crypto transactions, and coming soon, we're going to start blockchaining and creating an NFT from the deeds if buyers would like. That's it.
That's awesome, Jim. Thanks everybody for attending. Hope you had some great info shared. Now you can know, let's get you some deals. You have this info, you're armed to go talk to those sellers in those older condos, and hope you get some listings out of this.
And I have text me some future topics, you guys, you know, everything that we talk about, you're not going to hear other places. It's all cutting edge stuff. Have a great week and we look forward to seeing you in 2 weeks.
Thanks, Jim. Thanks, everybody.